You're watching Dukascopy TV. I'm Elaine Stenson and I'm joined in the studio now by Jean-François Owczarczak, Director of Management Joint Trust, Editor of Fingraphs.com. He's here with me now to look at the technical aspects of the US dollar currency pairs. Jean-François, you're very welcome.
Thank you for having me, Elaine. Okay, so we start on a Dukascopy directory, but as I mentioned over previous weeks, we have done a specific selection for this interview, so we go into our private selections in the portfolio A for Dukas, and here you have the major dollar pairs as well as gold and the 3 months US S&P future as well as the 30-year Treasury bond future. So let's look at the mosaic. Last week we were on the weeklies, nothing much has changed, so I'm going to start with the dailies today.
Okay.
So what you have here is that you have the three currencies quoted against the dollar here: gold, dollar Swiss, dollar yen, 3 months S&P, and 3 months Treasury futures. And we're going to start with the euro today. It seems like the euro has had a bit of a setback last week. We think it was in an uptrend, but it was a very dangerous uptrend, and we were quite careful about it.
Yes.
And maybe things are changing, so we're just going to have a quick look at it.
Okay.
So if you look at euro dollar here, well, it's pretty much a status quo on the weekly. Basically, usually when you're still in the bull trend with our larger envelopes here slightly heading up, you'd be in an early bull trend as it has recently turned and really not made it into impulsive territory. And you would want to have a corrective target up or an impulsive target up to confirm this bull trend. And here you actually don't. So that means our targets are not in accordance with the trend, which means that they're heading down at the moment. So both indicators being in different directions, it means that euro dollar is pretty much flat, and that the trend is also quite unidirectional. And what we see at the moment is that that's what has basically been happening over the last 3 quarters.
Okay.
So the general environment is that of indecision. The euro has made a correction up over the last year or so, or 12 months, and it would really need to confirm that to create a longer-term uptrend. The alternative is resume a downtrend and a new period of weakness for the euro.
So were you expecting that it was going to start going down again?
Well, what we had here is that we had the daily, which was heading up, which was in an impulsive move up, but slowly getting into a region where the two envelopes were touching each other, and we were slowly getting towards an overbought zone in the risk index. Now, we have mostly a trend following system, so we really need to see weakness appearing to start changing a direction. But in an indecisive environment, the fact that we really didn't make it high enough to make it into the impulsive territory here, I mean, we really should have made it above the 134.32 to really confirm the uptrend. You would have had an impulsive target last week, but the volatility has increased, and so in this respect, if you look at the move in retrospect now, it's basically for now a failed attempt to move impulsive up, and so the alternative is to move back down. So the correction up is labeled done here, and it seems like the euro could slowly be rolling over. Now, you don't have much of a confirmation yet, but it seems like at least that a scenario is more plausible than last week.
Do you think that the ECB's decision this week will affect the euro?
I think it's pretty much in the cards already.
Yeah. And
so people are really looking for America to show that it can sustain its growth over the next few quarters. So probably the non-farm payrolls are probably going to be quite important, and a lot of eyes are on them. But if you look on the hourlies here, you've headed impulsive down. That means you've gone through our corrective targets. And the hourlies, that means a view over the next 2 weeks or so, are pointing towards the 131.50 to 130.60 levels. If that were to happen, that would probably start fueling a more aggressive move on the dailies to the downside. That said, short term, we've had quite a large sell-off last week. We're slowly getting towards strong exaggeration on our hourlies. Our risk indicator is in the green in the oversold zone, our two envelopes are touching each other. And so although the envelopes are heading down, this intermediate stress should create some intermediate consolidation during the course of this week. And so we're quickly going to flick to the trader's view.
Yes.
And as you see here, on the 60 minutes, we're slowly getting into the expected targets. Also quite a lot of exaggeration here. On the 15 minutes, there's probably a bit more to go over a day or so, but we're not very far here from, not very far, there's another 50 pips or so, but we're slowly getting into zones which are oversold. And then on the 4 minutes, we're probably not quite finished yet. We're moving on to the corrective targets. If we were to go down, we'll probably conclude this move here. But basically, you could probably expect a bounce, probably starting in 24 hours or so over the course of this week. And then the non-farm payables are probably going to be the crucial numbers on the euro towards the end of the week.
Okay.
Now, moving out, going back towards the other currencies, similar situation on a cable, which basically, although it has been moving sideways up for the last 2 quarters almost, still hasn't been able to make it above its corrective targets. The long-term trend is still heading down, so that means, if you see here on the weeklies, so that means that if it really can't create an impulsive move up, at some point it's going to resume its trend down, and that's still our favorite scenario for now.
And we're also going to get the Bank of England's decision this week.
Also, yes.
Will that affect the cable?
Well, basically, if you see here, you're pretty much hitting on top of, or you're hitting close to the corrective targets here to the upside, so really would need to move over to see anything meaningful, so that's about above 157 to really create a long-term uptrend. If you look here, the crucial points are below 153.80, so a priori, we're still within a range at the moment. Now, if we look at the mosaic, well, dollar Swiss pretty much the same thing as euro dollar, but has just been weaker. It is attempting to correct up. If you look here, the hourlies, although the dailies are still heading quite aggressively down, have made it up to its corrective targets. It really would need now to move higher to create a meaningful move. So that's above 93.34.
Okay.
Now, coordinating that, it seems like this move on US dollar Swiss, if we go to the hourly mosaic, was very much correlated with some relief on the Treasury bond sell-off. It seems like we were pointing to a few weeks of a counter trend here last week, where Treasury bonds could start to correct up without casting doubt over the longer-term trend, which we still think is down. And so probably some opportunity fishing here has brought some flows of money back to the US and back to the US dollar. And hence, these two moves are quite well coordinated. It seems like equities are slowly getting towards a bottom too in the US, so that is also would be a positive sign if people were to get back into it. And on dollar yen, has been the strongest dollar pair all through this dollar weakness over the last 2 months. And it seems like the consolidation has been very flat. We're still quite positive over the next quarter or so. And it seems like it is accelerating at the moment. So that's another confirmation that the dollar may be starting a more comprehensive move.
Okay. Jean-François, thank you very much for that.
Thank you very much.
And that's all we have time for now, but do check back later for further updates and interviews from the Dukascopy TV team. Bye for now.